Welcome to Seeking Alpha Editors Roundtable. What moved markets this week for the week ending Friday, October 22nd? A strong week for stocks. The S&P 500 closed at a fresh record high yesterday, and a week where retail investors rediscovered the meme craze with a bit of a twist, this time flocking to a certain SPAC affiliated with a certain former president of the United States, and that particular security has skyrocketed quite a bit. We'll talk about that later, as well as some other things, with the following protagonists here joining me in no particular order: Brad Olison, the VP of News; Kim Kahn, Senior News Editor; Steve Alfer is off, perhaps counting his Bitcoins; and Jason Kapoor is filling in for him. He is the ETF news strategist. I am your host and moderator, Nathaniel E. Baker, senior editor of Strategic Contributors here at Seeking Alpha. So let's kick it over to Kim, as we normally do, to give us the big picture lay of the land of what moved markets this week.
Well, it's nice to see market wisdom be correct. Once in a while, everyone was saying that the S&P 500 is overdue for its 5% pullback. Once it did, that it could regain its stride and march upwards, which is what it did. It's erased that 5% pullback, and that's now back into record territory. It's dipping a bit as we speak, but it's still right up there that level. And so there's it's been an encouraging week for most sectors around the S&P, and at the same time, rates have been moving higher. The 10-year has been climbing closer to 1.7%, and that's helping get reflation trade plays. And that's been driven really by a rise in inflation expectations. You've got the 5-year and 10-year break-even expectations kind of nudging up to all-time highs of where they had been since they started collecting the data.
Yeah, an interesting week. I mentioned that was a strong week, maybe not so much for tech stocks. We had Snap and Intel selling off after they reported earnings yesterday, which begs the question who the other winners and losers were this week. Brad, take us through that.
I mean, you hit it, Nat, mostly earnings, right? So Pool Corp, which is, obviously a household goods name, blew it out of the water, so to speak, with their earnings. Anthem Health, their managed care provider, also an earnings name, one of the bigger winners there. They helped lead most of the sector higher there following their earnings. Health was basically the second best performer in the S&P 500 on an industry basis. HP Inc., that's the printer and technology company, also did extremely well with their earnings. PNC, following the strong banking trend that we saw last week with some of the bigger banks, they also reported earnings and soared. And also, one of the more interesting stories of the week was the Pinterest and PayPal reported deal, which helped the other big winner this week, Etsy. It's my estimation that their shares rose in sympathy with the announcement of that deal, given their, I guess you could argue, slight similarities with Pinterest. And on the downside, losers, in honor of Big Blue, I'm wearing blue today, but you kind of have to toss one out for them. They had really poor results, vindicating legendary short seller Jim Chanos, who I guess picked the right time to come on TV and really discuss his short in the name. He was alleging all sorts of financial engineering going on at the company, and regardless of whether those allegations are true, that they still missed analyst expectations. Intel also missed on the earnings expectation side. They cratered. Ulta Beauty had an analyst meeting, so I guess one of the few non-earnings related moves this week. Ulta Beauty lowered some of their outlook for their comparable growth. We, as an aside, we happened to have flagged that from the Seeking Alpha news team as part of our Catalyst Watch for the week. So, had you been reading that, you would have known that this was going to be a rather big event for them. They were one of the biggest losers in the S&P 500 this week, and also Baker Hughes. I don't know how much of the move lower in their shares could be attributed to the fact that they've run up 73% already this year, or whether they missed on their earnings, but nevertheless, they did miss.
All right, let's move on to Jason. ETFs, so that's your beat. That's what you cover for us here at Seeking Alpha. I heard there might have been a Bitcoin launch this week. I'm not sure. Maybe you can tell us about that.
Yeah, I don't know if everyone missed it, but yeah, obviously the big story of the week, undoubtedly it was around the ProShares Bitcoin Strategy ETF, ticker BITO, which launched back on Tuesday. Very warm welcome to the market. The ETF has already took in over $1 billion worth of assets, and on its opening debut alone, $994 million in total trade value, just shy of $1 billion, happened on day one. And to kind of put that into a little bit of perspective, only the BlackRock U.S. Carbon Transition Readiness ETF has experienced over $1 billion in total trade value. So significant on that nature. Also, on the week, we now today have learned that we also have another Bitcoin strategy ETF out there, the Valkyrie Bitcoin Strategy ETF, and that's ticker BTF. And on Monday, we should be seeing VanEck's version, which is going to be ticker XBTF.
All right. Let's move on to the next segment of the show, where we discuss our favorite stories, Seeking Alpha contributor articles, tweets, or other things. I guess Pinterest posts would potentially qualify. Well, I don't know what that would look like, as I think I was on Pinterest once. Anyway, let's start with Kim.
All right, well, it's time to talk DWAC, which is Digital World Acquisition Corp, which is inked a deal with Trump Media Technology Group, which is going to lay waste to Amazon and Apple and Google and Facebook and also Netflix and Disney Plus, if you believe their presentation.
Other than that, it won't do much, right?
Yeah, and the stock itself is, we look at stock move just in and of itself, it's soaring. It was up as much as 1,300% over 2 days.
Crazy times. These are not the type of things that happen during bear markets, by the way. So you can consider that for what it's worth. Brad, what about you? Favorite stories?
So I don't want to call it favorite, because then they'd just kind of be kicking people while they're down, but we'll stay on the social theme with Snap earnings last night. You could talk about how this was very curious timing to launch the DWAC SPAC, targeting lots of social media companies on a day in which many media companies, and a few day span actually, when a few social media companies are due to report earnings. The names you'd normally recognize, like Facebook and Twitter, and to a lesser extent Google and some of these other names, but also ad tech companies like the Trade Desk and Magnite. Those tickers are TTD and MGNI. Also were hit a little bit on the fact that this is having a material impact on Snap results and Snap earnings. Snap did fall about 25% after earnings, one of their larger moves. You could still argue that shares are still up on the year, so all is not, it's not the end of the world for them, but it was just all about their guidance. They expect to see less clarity on their users and an inability to more regularly target them, which could hurt their ability to charge larger advertising fees, I guess, for others. So very active week for social media in the aggregate.
Yeah, and Snapchat also blamed the supply chain for some of their issues, which was a little bit interesting. All right, Jason, what about you? Your favorite stories other than the ones that you already spoke to us about?
Yeah, obviously there's been a tremendous amount of news and information around the crypto aspect within the ETF world. But on the another front within the ETF land, there were 3 new thematic ESG funds that came into play this week that were launched by Index IQ. An IQ eGender Equality ETF, ticker EQUL. Another one, IQ Cleaner Transport ETF, ticker CLNR. And IQ Clean Oceans ETF, ticker OCEN.
Very interesting. All right. And for me, I will once again plug the pro editors, or the pro segment of the Seeking Alpha website, a piece here that we picked up by Tim Travis on Citigroup. This is a bit of a contrarian call, or very contrarian maybe, seeing how Citigroup stock has gone nowhere for 50 years. But Tim Travis here sees 25% upside in Citi's stock. He says it's the most undervalued large bank by a considerable margin, trading at just 90% of tangible book value. And while the competitors trade at meaningful premiums to tangible book value, and only 7.5x normalized earnings. So the interesting piece here, title is Citigroup is the most fundamentally undervalued large U.S. bank. I believe they reported last week. I don't know what's going on. The stock's up 1% today, for what that's worth. Oh yeah, a bit of a dip there when they reported. Anyway, so that's yeah. So he has a target of $90, 90, currently trading around 71.25. So we'll be curious to see how that turns out. All right, very interesting conversation here today. Thank you all for staying with us. And reminder that you can check out the video, which airs on Friday afternoon at the website seekingalpha.com. Just go to videos and you'll see it there. And if you have been watching the video and want to check out the slightly longer audio version, which includes a little bit more discussion on cryptocurrencies, go to the Seeking Alpha's Wall Street Breakfast podcast, which is out on Saturday morning at 6:30 a.m. You get that anywhere you get your podcast. Just look for Wall Street Breakfast. And with that, we wish you a happy weekend and look forward to speaking to you again next week.